Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Wednesday, May 15th, 2013. Well, a change of trend to the downside today in the candle. It's made a lower high and a lower low. The market has closed substantially down below the previous close, suggesting that the sellers are very keen, or were very keen as at the close of trading today. And we have had a bearish close down below the round number 1400 level of support. That was previous resistance and then acted as support, and we would have expected that market would have seen some buying coming in around that 1400 level. We haven't seen that. The market has interacted with the previous level 1380 just below there, and we have seen a small amount of price rejection, but really a candle where the sellers have made a substantial amount of net bearish progress. They've closed with control. They've been very strongly committed, and they've shown how strongly committed they are by taking out the 1400 round number level of support, and this does suggest that there is good potential for this market to trade to lower levels. Now, if we do see a solid test down below the 1380 level in a very bearish manner, we could quickly see this market trading down to 1329, where the market found very strong support in that very strong sell-off that we saw over the last month or so ago. So a very crucial area for this market around 1380. But in terms of this candle, really the sellers have really very strong control of this, and there isn't any hint here that the buyers have any strength. The thing here is, though, that 1400 now may be a barrier to the upside to this market when it was previously resistance and support. It may be a barrier for the next day's trading, and already we've seen the market attempt to trade up to there, and a small amount of selling coming in, so that's important. But at the moment we are also seeing price rejection from the 1380 level, so we do need to watch that 1400 level or the 1380 level very closely. Now, in terms of that pattern that we saw previously, it was a type of rectangle pattern. They tend to be continuation patterns, but we were waiting for a breakout in either direction. The market tested below the bottom barrier, then finally closed in a bearish manner down below there, and the target was the width of the pattern projected down, and we have met that target today. So that pattern has worked out to be quite good. Also, when we were trading within that pattern, I suggested that the breakout was more likely to be to the downside because the market is trading down below the cloud, and that also gave a more chance that the pattern would be a reversal rather than a breakout to the upside. But really, what we need to do is react to how the market behaves with either a breakout above or below with these patterns. All patterns need confirmation, that is a close above or below barriers. Now, in terms of the Fibonacci extension, so we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and here today we've seen a solid bearish close down below the 161.8% level at 1400, and that strengthened the support there, and the sellers have been so strong in today's market they've just taken that out in a very bearish manner, and this does suggest that there is a good likelihood that the market will test down to the 261.8% level at 1353, and that coincides roughly with this area where the market was previously rejected from. So we should see some solid buying coming in down around that area. However, in terms of the Fibonacci retracement, we're in an expansive mode of that, and the market did trade through the 161.8% level. It was tested for the 3 previous days in succession and failed to close down below there. Today we've closed in a solid bearish manner down below the 161.8% level, and the market did interact roughly with the 261.8%. We saw some price rejection, but slight doubt about continuation of the trend, but only very slight. There's no sign here that the buyers are coming back into the market. The sellers are in control. What we need to do is watch how the market reacts to this level. At the moment, the market has tested closer to that 261.8% level, which is at 1382, and we have seen rejection from there. So if we do see a change in sentiment and the buyers take back control of this market, then it will mean that level will hold and there will be good potential for a change of trend. But if we do see a solid bearish close down below the 261.8% level, we have potentially strong support down at the 423.6% level at 1325, and that coincides with the swing low and a major swing low down here, which should provide very solid support for this market. Now in terms of Ichimoku, obviously a bearish market in all three time frames. The market's trading down below the clouds, so the market is bearish in the long-term time frame, and now also trading down below the Kijun-sen and the Tenkan-sen, so bearish in the medium and fast-term time frames, and the Chikou span is below the corresponding price action. So it's confirming the negativity that we're seeing in all three time frames. The market is trading a fair way down below the cloud, looking a little bit overextended, but as we move into the trading week, and it'll be sometime next week, if the market stays around this area and congests, then we will be closer to the cloud here, and the cloud represents equilibrium in the long-term time frame, and markets move away from equilibrium, as we can see here, away from the cloud and then back towards equilibrium. So there is a possibility that the market might find some equilibrium within the next week or two. That would suggest that if the market finds equilibrium around this area, then we have potential to see another sell-off when the sellers come back into the market. So let's watch for that. To the upside, with the 1400 level being very close at hand, then as I've mentioned, it does have potential to hold as very, very strong resistance for this market now, but also at the area above there at 1432, previous resistance turned into support, and that will be a crucial area. And we also have the Tenkan-sen trading around that area, and just above there the Kijun-sen as well. So obviously a market that's very, very bearish in all three time frames. The sellers are very strongly in control. The 1380 level is crucial to this market, and as I've mentioned, if we see strong bearish activity down below there, we could quickly see the market testing down to around this 1329 level.